Ladies and gentlemen, good day and welcome to the Batliboi Limited Q2 and FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Ms. Saloni for the opening remarks. Thank you and over to you, ma'am.
Good afternoon, everyone. On behalf of Batliboi Limited, I would like to welcome you to our earnings call to discuss the operational and financial performance for the second quarter and half year of financial year 26. The session is being hosted by Go India Advisors. Joining us from the management team are Mr. Nirmal Bhogilal, Chairman of Batliboi Limited, Mr. Sanjeev Joshi, Managing Director, Mr. Kabir Bhogilal, Executive Director, Mr. Kapil Arora, CFO, and Mrs. Pooja Sawant, Company Secretary. Please note that today's discussion may include certain forward-looking statements which are subject to various risks and uncertainties. I encourage participants to consider these factors when interrupting company developments. With that, I now invite Mr. Bhogilal to provide an overview of Batliboi's business, outlook and performance. After his remarks, the floors will be open for Q&A. Thank you and over to you, sir.
Thank you. Good afternoon, everyone. Since we are meeting soon after Diwali, a very auspicious Saal Mubarak to all of you and my very good wishes for the season. I trust all of you have had the chance to review our investor presentation and financial results which are available on the stock exchange. The industrial machinery sector continues to see encouraging momentum with strong infrastructure activity, rising private capital expenditure, and increasing requirements of modern machinery for improving productivity and quality. Against this backdrop, our company has delivered a robust performance marked by improved order inflows, order execution, and stable margins. This is as per the business forecast given in our first quarter investor presentation. India's capital goods sector is gaining significant traction as it plays a vital role in driving industrial growth and supporting the country's broader economic development. Strong policy support from the government has been a key enabler, with the Ministry of Heavy Industries introducing multiple initiatives to strengthen domestic manufacturing and reducing import dependence. These measures form an integral part of the Make in India mission aimed at enhancing the manufacturing sector's share in GDP, creating employment opportunities, and fostering technological advancement. The capital goods industry remains at the core of India's growth strategy, anchoring large-scale manufacturing, industrial modernization, and infrastructure expansion. With rapid urbanization, continued infrastructure investments, and focused government initiatives, India's capital goods sector is well positioned to drive sustainable industrial growth and elevate the country's standing as a global manufacturing hub. Amidst the global uncertainty, India has continued to stand out as a pillar of stability and growth. The country recorded a strong GDP expansion of 6.5% in FY24-25, the highest among the major economies. The Reserve Bank of India expects this momentum to sustain, projecting a similar 6.5% growth for FY25-26, backed by robust domestic demand, policy support, and a renewed focus on industrial and infrastructure development, which definitely creates growing demand for capital goods. Batliboi has grown to a position of leadership among engineering companies. The company has spearheaded technological change in all its activities: manufacturing, engineering, contracting, and marketing. Our manufacturing facilities are located at Surat in India and Peterborough in Canada. Batliboi has established itself as a trusted engineering and contracting partner for several major turnkey projects both in India and overseas. The company places strong emphasis on delivering superior customer service and operational excellence. At the corporate level, Batliboi operates through multiple business groups, supported by a dedicated team of engineers providing comprehensive pre-sales and post-sales service across a nationwide network of over 15 offices. Its operations span a diverse range of segments, including machine tools, air engineering, textile machinery, environmental engineering. With a forward-looking approach, Batliboi remains committed to continuous investment, diversification, and expansion in both scale and quality of operations. Through its engineering expertise and customer-centric approach, the company aims to contribute meaningfully to industrial progress and help build a stronger, more self-reliant India. Let me now provide a brief overview of our main business segments. First is the machine tools. Batliboi's machine tool group's manufacturing facilities are situated at Surat in India and Peterborough in Canada. The Surat facility is situated on 180,000 square meters of land. It has a well-equipped design and manufacturing facility of 30,000 square meters. The products manufactured are conventional and CNC drilling machines, CNC vertical machining centers, CNC turning lathes, and CNC vertical turret lathes. Alongside manufacturing, we represent leading global brands for both metal cutting and forming applications, offering end-to-end machining solutions. The business is supported by over 60 trained engineers and technicians for both sales and service through a network of 15 offices. The Canadian subsidiary Quickmill Inc. produces gantry drilling and milling machines and serves industries ranging from energy, structural steel, to aviation and job shops. Quickmill's strong global reputation is evidenced by more than 400 successful projects and over 105 satisfied clients worldwide. Our textile engineering division is strategically organized into two segments: air engineering and textile machinery. The air engineering group delivers advanced solutions across textile value chain. The company manufactures at its Surat factory comprehensive range of air engineering equipment, including high-efficiency fans, rotary drum filters, waste compactors, fiber recovery and condensing systems, as well as other auxiliary equipment. This group is also now focusing on the non-textile sectors for its air engineering needs, for example, the food, synthetic materials, and factory ventilation sectors. The textile machinery group serves spinning, knitting, processing, and technical textiles, representing world-leading brands such as Meyer & C, Saura, Pentec, Pardis, Index, etc. Its long-standing association with the textile industry, coupled with reliable, high-technological equipment and an extensive sales and service network, has reinforced the company's reputation for excellence. The Environmental Engineering Group, which was the erstwhile Batliboi Environmental Engineering Limited, conducts its business through Air Pollution Control Division, gasification, and industrial fans. The Environmental Engineering Group spans air pollution control equipment, industrial fans, and green hydrogen. As a leading provider of air pollution control and fan systems for industries such as steel, power, oil and gas, sugar, and cement, the Environmental Engineering Group offers 100% Make in India solutions. This division has now commenced manufacturing of critical fans in our own factory in Surat and will continue to ramp up production in the coming quarters and years. Our new subsidiary, Bioconserve Renewable Envirotech Private Limited, which is in the field of zero liquid discharge, had again a profitable quarter and expects to end the year with reasonable profits. With policy support from initiatives like Make in India, Atmanirbhar Bharat, and the Production-Linked Incentive Scheme, the domestic manufacturing landscape is steadily gaining strength. Also, with the increasing focus globally in Indian manufacturing activities, we are expanding into new geographies, specifically the Gulf region, Vietnam, Bangladesh, Uzbekistan, and Egypt for our products and services. Our Canadian subsidiary Quickmill is also focusing on expanding markets in the Gulf region and have since received breakthrough orders in October of this year. Looking at the opportunities from all this explained above, Batliboi is targeting revenue growth of 10 to 12% in both top line and bottom line for the entire year. I now hand over to Mr. Sanjeev Joshi, our Managing Director, to share the operational and financial update for the quarter. Thank you.
Good afternoon, everybody. Good afternoon, everybody, and thank you for joining us today and showing your continued trust in Batliboi. I will now walk you through the Batliboi's financial and operational performance for the quarter. In this quarter, our revenue from operations grew from 121 crore compared to 70 Q1 of FY26. Our EBITDA grew to 11 crore compared to an EBITDA of rupees 24 lakhs in Q1 of FY26. Our profit before tax showed a sharp turnaround from a loss of 3 crore in Q1 to a profit of rupees 8 crore in this quarter. Profit after tax also improved to rupees 6 crores in this quarter compared to a loss of 2 crores in Q1. This robust performance was driven by improvement across all our business segments despite challenges faced in the textile business. Our efforts do continue to drive strong order inflows. As of September 2025, our order backlog was approximately rupees 621.44 crore compared to rupees 490.29 crores at the end of Q1, and on a comparative basis of Q2, 412 crores of the last year. We are now planning further capex of rupees 8 crores as a part of our expansion for the balance part of the year. To now highlight on the performance of division-wise, I would like to state here that the machine tool division recorded an order inflow of rupees 108.61 crore as per the business forecast which was given in the previous presentation at the end of Q1. Our revenue in Q2 is rupees 22 crores as compared to rupees 18 crores in Q1, which was also reflects the commitment of better growth Q2 onwards. Our order backlog at the end of Q2 is 114.39 crores compared to rupees 89.94 crores at the end of Q1. Quickmill recorded a turnover of 34 crores in Q2 compared to rupees 14 crores in Q1, and against a loss of rupees 141 crore in Q1 has now reported a profit of 3.23 crores in Q2. This is as per the business forecast which we had given in our previous presentation. The Air Engineering Group reported a revenue of 18 crores in this quarter, accompanied by improved order inflow of rupees 14.63 crore, which was again as per the business forecast given in the previous presentation. The Textile Machinery Group had an order inflow of rupees 180.85 crore compared to rupees 167.39 crores in Q1, and also our order execution of rupees 92 crore as compared to rupees 60 crore in Q1. Both these were as per the business forecast given in our earlier presentation. The textile sector continues to face challenges due to the tariff issues with USA, the demand recession in EU countries, partly caused by the Russian-Ukraine conflict, and the ongoing political uncertainty in Bangladesh. The Environmental Engineering Group reported an inflow of rupees 33.2 crores and a revenue of rupees 33 crores in this quarter, which is again as per the forecast given in our earlier presentation. And with a healthy order backlog for this division, we expect an improved performance for the balance full year. I am confident that Batliboi will deliver improved and strong performance in the coming quarters, building on the momentum we have established. With our strategic initiatives, robust order book, and focused execution, we are well positioned to sustain growth. I'll now open the floor for questions and answers. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shweta Tiwari, an investor. Please proceed.
Hello.
Hello, yeah.
Yeah, we can hear you.
My voice.
We can hear you, please.
Yeah, so I just had a few questions. So what is the next for Batliboi post the merger? So like what would be a focus area going ahead? And also like are there any further inorganic expansions planned?
Well, I think we've already given you some idea of what we expect for the balance part of the year and what we will do for the full year, which is in terms of both top line and bottom line growth. I'm not sure what further information you would want. As far as the inorganic growth is concerned, well, as we had mentioned earlier when we did the fundraise, that we'd be looking at also inorganic growth. So we are constantly on the search for suitable acquisitions which could add value to our current business lines, which is primarily in the field of capital goods. I hope that answers your question.
Yes, sir. Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. The next question is from the line of Mahijit Ahmed from Pinpoint X Capital. Please proceed.
Am I audible, sir?
Yeah, you're audible. Please go on.
Yeah. Yes, sir. Thank you for the opportunity, sir, and very good set of numbers. Sir, so my first question that I have is, like, how is the newly merged engineering business and what type of synergy that you're looking post the merger in terms of synergies and...
Well, when we did the merger, we had mentioned the kind of synergies that we expect, that we would leverage the wide network of Batliboi and Batliboi's customers for the benefit of the environmental engineering group. I think that has already been achieved, and obviously it's an ongoing process. The second was to integrate the centrifugal fan manufacturing into one unit, which also has been done, and you will see we already started seeing the results of that in Q2. And the third point was that the environmental engineering business, while it doesn't require cash, it requires more non-fund based limits, which was a limitation for the environmental engineering group because of its low asset base. So that has been overcome, and the banks have already granted us additional facilities in terms of both bank guarantees, LC facilities, etc., so that we could grow the business further. So that would not be a limitation to the growth of the environmental engineering group. So I think all the assumptions that we had made at the time of the merger are being fulfilled.
Okay, sir. Secondly, sir, so you were saying that the gross margins would be ranging from 38 to 40%. But this quarter we have done a very good improvement to 43%. So going forward, what would be the margin improvement, especially on the gross margin side? And from here on, how are we going to leverage that to ensure that we are able to meet the guidance of 10 to 12% EBITDA margin?
Well,
Yeah, please go on, sir.
Go ahead. Hello?
Yes, sir.
Yeah, please go on, sir.
Yeah. See, the point is that there could be some margin fluctuations during the year depending on the product profile and how the product changes. So our standard guidelines that we had given earlier still hold good. Okay, there could be increases in one quarter, there could be slight dips in the next quarter, but overall our margins will remain stable right through the year. The second is that with volume growth, which we envisage, automatically the EBITDA percentages will improve as fixed costs continue to remain more or less the same.
Okay. But that's fine, sir. But this time we had a very good improvement in the gross margin as well. So do you feel would this continue, or would it from here also there is a possibility of improvement in the gross margins as well?
So I don't think the gross margin will improve anything substantially more than this. And as I mentioned, that our gross margins also depend on product mix. So looking at the way the business is, I would say that we would have a pretty stable gross margin regime.
Okay, sir. So the textile industry is quite sluggish and anticipated for a while. So can you elaborate the impact of your textile machinery division?
See, so far, what has affected in India is the spinning sector and anything related to garments. So knitting to some extent falls in that category as well. But if you look at the overall textile industry and you see the textile industry results of Q2, they are not bad at all. In spite of all the hurdles that we are facing thanks to the tariffs imposed by the USA, as well as the downturn in the EU market thanks to the conflict between Russia and Ukraine, as well as the political uncertainty in Bangladesh. But don't forget that in India, there is a great need to go up the value chain in the textile industry. So we are in those sectors as well, whether it comes to knitting, whether it comes to processing, where there is a great need to go up this value chain. So we are seeing a continuous growth in that sector. So overall, while the challenges are there in the textile industry and therefore the textile machinery industry, we still maintain what our plans are for the current year. So I wouldn't be too perturbed about this. At the same time, there is a good chance that the Indo-US trade agreement will take place pretty soon from all the indications given by not only by Mr. Trump but also by Mr. Piyush Goyal. If that happens, then obviously the textile industry will get a great fillip.
Great, sir.
In fact, if you see the results of Lakshmi Machine Works in the second quarter, they've done far better than compared to what they did last year.
Yes.
In the same quarter.
Yes, fine, sir. And secondly, sir, I just also want to understand that regarding your ZLD subsidiary that you're looking to diversify, how do you see the opportunity there, and there are multiple players in the segment, and how are we going to...
Sorry, which subsidiary?
Yes, sir. The Bioconserve Renewables.
Well, there are not that many players, and we have some very, very good technology through a past association with the Italians. So if you see, a lot of the well-known textile companies in India have been our customers. So we see great growth potential, and once we stabilize in the textile industry, we will also look at other industries which require zero liquid discharge, for example, like pharma, food, etc.
Because there is things like, especially in the automotive sector, there are some GLD players who are going aggressive into that. Are you looking into that sector as well?
Well, at the moment, our moment is the focus is on the textile sector, and gain an excellent reputation there. Then we'll move into the other sectors. There's enough scope at the moment for us to do good business in the textile sector.
Thank you, sir, and all the very best. Thank you.
Thank you.
Yeah, thank you.
Thank you. Participants who wish to ask a question may press star and one now. The next question is from the line of Naitik from Sequent Investment. Please proceed.
Hello.
Yeah.
Sir, am I audible?
Yeah, you're audible. Go on.
Oh, okay. So, sir, my first question was that in the first half, we have done a total, sales of 190 crores, and in the first 2 quarters, and the total order book right now is 621 crores. And in the presentation, we've mentioned that we plan to, close this year with an order book of 1,000 crores, or achieve an order inflow of over 1,000 crores for the full year FY26.
Yeah.
So, given this, can you help us understand that from which sector do we expect these orders to come, and what sort of execution do you see in the next 6 months?
Sanjeev, you want to answer that?
Inflow, yeah, I'm answering that. You see, the order inflow we expect from all the divisions that we have. We expect a good order inflow from our environment engineering division, which is now in the pursuing some very big leads. We are expecting a good order inflow from our quick mill Canada operations. A good order inflow is now expected from textile air engineering division, which we make those equipment in our Udna factory. And there is also scope for our machine tool trading division, where actually, if you see, after a very long spell of time, there is a flurry of activity in this business because of the government initiative to ramp up infrastructure industry. So we have got very strong leads, and those orders are big ticket value orders of something around 15-20 crores each. So that division is pursuing some very, very potential prospects, and we expect those order bookings to happen in Q3 and Q4. So we are pretty confident that when we are saying that we'll be crossing 1,000 crores based on today's overall inquiry levels that we have in each and every division, we are pretty confident that we'll be crossing 1,000 crores for the whole year, FY25-26. That is the first question answer. What was the second question you wanted?
So the first half we have executed 190 crore order. So what sort of execution do you see in the second half of the year?
So normally,
I think we'd already given you a forecast that we will end the year with 10 to 12% growth in our sales.
10 to 12% growth in our sales over the last year.
Yeah, right.
Okay. No, because we have a very strong order book in hand, and then if we grow our only at 10 to 12%, that math doesn't match up. So, that was I was trying to understand.
Well, we also want to be a little conservative, no?
Okay. And sir, my second
I'm sure you'll appreciate if we exceed the forecast that we give.
Yeah, 100%, sir.
Okay.
No. Okay, and sir, I see that there is a change in management. We've appointed a new CFO. Are there any further management changes planned, or are you looking at hiring more talent? How is that plan?
We don't foresee any management change, but we are always on the lookout for talented people. Okay, so recruitment will always be there of talented people, but not as replacement, but as addition.
Sure. And sir, if I would want to know, us currently also 69% is domestic and 31% revenue is international. So going forward, when we are, envisaging that our order book would be 1,000 crores by the end of this year, so which geographies do you see they would be coming from?
I'll just answer that question to you. See, basically our air engineering division, which was basically more of a domestic, last 2 years we have taken the initiative to focus more on exports. So we are basically looking at Bangladesh. Unfortunately, because of the political situation, a lot of orders are on hold. But I'm sure in near future, if that gets released, it's going to be one of our focus areas. Right now, we are also focusing in, which I think we have put in the presentation somewhere, that we are looking at Vietnam, we are looking at Indonesia. We have got a breakthrough order in Indonesia. We are likely to get a breakthrough order in Vietnam in this quarter, the next quarter. We are also pursuing some orders in Uzbekistan, and we have lined up with LMW for all the requirements for the ranging, and we are pursuing some orders in Egypt. So we are taking a call that way forward is that the focus on exports have to improve, and we see that what best we can maximize on this business segment along with the growth of domestic business also. So for that, for the textile engineering, for Environment Engineering Limited, we are not participating in Thailand, we are not participating in Indonesia. There's a lot of business potential exists for fans in this sector. So again, primarily, I would say Southeast Asia would be our main geographical area for future growth in exports business.
Okay. Okay.
Also, just to add to what Sanjeev mentioned, don't forget that Quickmill, most of its business is outside Canada. Earlier, it was more focused only on the US. Now it is focusing a lot on the Gulf and Saudi. And we've had breakthrough orders from companies like Aramco, etc. in Saudi Arabia. So even for Quickmill, non-US business is becoming more important.
Okay. Okay. And sir, I would, I have one suggestion. Sir, like last quarter when we had a presentation, we mentioned that our order book was 490 crores. And now in this quarter, we mentioned that our order book is 621 crores. So I think I don't know, but in the meantime, when we receive these orders, I don't think we are uploading them on the exchanges as and when we receive. So, if we update the exchanges as and when we receive, it will be easier for us to, envisage that what sort of growth can Batliboi do instead of getting surprised on a quarterly basis during the presentations.
We didn't give you a surprise. We had already forecasted to you. So it's not a surprise. And second is, you only upload on the media or on the stock exchange something which is very large or very unusual. Okay. Every day ordering those are not reported. I mean, if you look at a company like L&T only reports when it gets some either a very breakthrough order or a very large order. They don't report on an everyday basis what orders they are receiving. So I think it would not be correct for us to, upload on the stock exchange, every now and again, every order we receive. If we have something interesting, breakthrough or very large by our normal standards, certainly we will inform.
Okay. Fair enough, sir. No problem.
Yeah.
Thank you. That's all, sir.
Thank you.
Thank
you. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 now. The next question is from the line of Manoj Jetwa from KSA Shares and Securities. Please proceed.
Good afternoon, and thanks for giving the opportunity for Q2 FY26 Concall. So my question to the management would be on the bioconserve renewables energy. So any thought process where we are right now and how the future we could see over a period of 5 years?
See, at the moment, as I mentioned, we have just started this business. We've just completed 2 quarters. We are already profitable. We expect a reasonable profit at the end of this year. We are focusing primarily on the textile industry for zero liquid discharge. Once we have some stability in the operations and we've earned a reasonably good name in the textile industry, we will move on to other industries which we have already kind of earmarked. One would be pharma, the other would be food, where there is a great need for such systems. So when you look at a 5-year forecast, yes, within 5 years, we'll be diversifying our activities into other industries. But, zero liquid discharge is a very, very important focus for environmental control and water management.
So to make the green hydrogen, we would be requiring the electrolyzers, right? So most probably we would be importing from China because in the other parts of the world, sir.
Yeah,
Sanjeev, you can
answer.
right?
Yeah, we have a tie with some Chinese manufacturer for electrolyzer, and we are pursuing small time orders, and we got some 2-3 leads, which we hope that we should be closing in either Q3 or start of Q4. A small step in that direction.
Sir, because the green hydrogen market by FY 2030 is expected to be something around 5 million metric tons. So,
correct.
Do you see the good opportunities which is awaiting for the company to cash in on the green hydrogen business?
Yeah, Manoj. Basically, we are very clear on our focus where we want to focus on this business because it's a very wide area for green hydrogen. We are looking at small hydrogen plants at the pharma or small chemical industries where they require hydrogen, but big guys are not really interested. So those kind of leads that we have in the range of small plants, that's where our starting focus will be. Once we gain experience in execution of such orders on total country basis, then maybe at a later part we'll diversify and start looking at the bigger part segment.
Do we have any plans to manufacture the electrolyzers in our Surat plant in India as such, sir?
No, right now no, because we are also on the learning curve. Once we get that requisite experience, going down the line, maybe we can think of that. I don't believe there is no plans to manufacture electrolyzers in our factory. Okay.
Okay. Thank you very much. All the best, sir.
Yeah.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 now. The next question is from the line of Lavish Jain from Sushil Finance. Please proceed. Due to no response, we may proceed to the next participant. The next question is from the line of Shrey Patel from RRR Investment Advisories. Please proceed.
Hello, good evening, sir.
Yeah, good evening.
My question would be that you have already answered that how would you be executing the backlog that is of 621 crores roughly, I think, as of September 2025. So can you throw some more light on how for the expected timeline for conversion into the revenue of this backlog?
See, it all depends on division by division. Different businesses have different time cycles. So it can range from lead time to conversion can vary from 1 month to 1 year, depending on the kind of business we are in. So it would be difficult to forecast exactly when this pending order backlog of 600 odd crores would get executed, but confidently within a year it should get executed.
Okay, sir. That would be it. Thank you for the opportunity.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Arth Jain from Mayur Investments. Please proceed.
Hello.
Yeah.
Yes. Yeah. Thank you for the opportunity, sir. So I just have one quick question. Like, what is the update on the 4 acres of land which was there for sale?
Well, we are still looking for suitable buyers. At the moment, we are exploring, we're discussing, but nothing concrete has happened so far.
Okay. And so, balance 8 acres, we were thinking to rent it out. So, is there any agreement with someone?
No progress at all, because we are looking at trying to see whether this can become an annuity for the company. And I think one of the opportunities, suitable opportunities are the IT, BPO type sectors, Unfortunately, Surat still has not picked up as a city for back office or IT work. In Gujarat, so far it is Baroda. So hopefully, with the international airport now at Surat, with the communication the way it is between major cities in Surat, I think in the near future we should see this activity also coming to Surat.
Okay, sir. Thank you so much and all the best.
Thank you.
Thank you. Participants who wish to ask a question may press star and one now. As there are no further questions from the participant, I now hand the conference over to the management for the closing comments. Over to you, sir.
Okay, let me on behalf of Batliboi thank all of you for spending your afternoon with us on this conference call. I hope that we have satisfied all your questions, answered all your questions to your full satisfaction. And as I mentioned to you, that we are very optimistic of the future, and we are looking forward to a growth as projected in our earlier statements for the balance part of the year. And I'm sure that we will be able to fulfill this when we meet next time on a similar investors call. So thank you very much and good evening.
Thank you all.
Thank you. On behalf of Batliboi Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.